If you ask the average Australian to name a billionaire, they would almost certainly give you a name from the mining industry. We're conditioned to think that the real money in this country comes from digging iron ore out of the ground in the Pilbara. There is, however, a massive fortune sitting right under our noses that has nothing to do with the resources boom. This wealth is built on the absolute essentials like the hardware inside your walls, the valves, the pipes, and the climate control systems that function as the circulatory system for every building in Australia. Right now, there's a family in Melbourne that sits on a fortune worth billions of dollars, and their strategy is focusing every ounce on their energy on one thing: owning the critical supply chain that powers modern Australia. Their name is Wilson, and their company is Reece. Reece functions as a logistics juggernaut that has effectively captured the entire Australian trade market, and they're currently deep in the trenches of a massive multi-billion-dollar fight to replicate that dominance in the United States. For the past 5 years, this company has been fighting a war on two fronts: a construction downturn at home and a brutal, fragmented market abroad. They've faced shareholder revolts, a massive squeeze on their margins, and skeptics who said they bit off more than they could chew. But as we sit here in late 2025, the data suggests the giant is waking up. So how did a humble hardware store from the 1920s evolve into an ASX 50 empire that outperforms tech stocks? How did one family manage to lock in the loyalty of almost every tradie in the country? And most importantly, can their massive bet on the American Sunbelt actually pay off? Or is it destined to be the overreach that finally cracks the dynasty? To grasp the sheer scale of Reece, you first need to understand the unique pressures driving their core customer. For an Australian tradie, the supply run is a friction point where every minute spent standing at a counter or driving across town for a valve is billable time evaporating. In an industry where time is the only currency that matters, a plumber stuck waiting for parts is effectively bleeding profit. This is exactly the code the Wilson family cracked back in the 1960s. By engineering their business to maximize speed and availability, they stopped selling mere plumbing supplies and started selling the one thing a tradie actually cares about: uptime. Harold Joseph Reece launched the business in 1920, hawking hardware from a truck in Victoria. But the modern powerhouse we recognize today was forged through a patient, decades-long acquisition strategy by the Wilson family. The shift began in 1958 when Les Wilson accepted a seat on the board and immediately started accumulating stock from the inside. Over the next 11 years, he quietly built a controlling stake, culminating in a 1969 regulatory approval that allowed him to merge Reece with his own thriving operation, Austral Hardware. This consolidation established a corporate structure that remains an anomaly on the stock market today. A multi-billion-dollar public company where one family still holds the majority of the chips and calls every single shot. Under the Wilsons' multi-generational reign, they deployed a strategy that's brutally effective, which is to simply exist everywhere. They expanded aggressively, ensuring that no matter where a tradie was working, a Reece store was within a short drive. By 2024, they had over 600 branches across Australia. But proximity was only the first step. The second was mastering the strategy called the roll-up. This basically means that Reece swallows smaller competitors to slash costs and crush the market. By systematically acquiring these fragmented businesses, Reece expanded their ambition well beyond simple pipes and taps, effectively seizing control over the entire circulatory system of the Australian building industry. In 2014, they made a massive power play, dropping $280 million to acquire Actrol Parts and Metalflex. Overnight, they became the number one player in the heating, ventilation, and air conditioning or HVAC market. They integrated these businesses into their logistics network, meaning the same trucks and the same software systems were now moving refrigerants alongside copper pipes. Reece also offers trade accounts with credit terms, which allows Reece to function as a pseudo bank of sorts, which is incredibly beneficial if you're a young tradie just starting out. They give you the materials you need to do the job today, and you pay them when the client pays you. This pretty much locks you in. Once your credit history and your business flow are tied to Reece, switching to a competitor becomes a massive headache. Then, they added the soft power. They put coffee machines in the branches, they trained their staff to know the tradies by name, and they built an app called Max that allowed tradies to order parts from their phone while sitting on a toilet at a job site, knowing the parts would be ready for pickup by the time they drove to the store. They took a chaotic, fragmented industry of independent contractors and gave them the tools of a large corporation. In exchange, those tradies gave Reece their undivided loyalty. By 2025, they were generating nearly $4 billion in revenue annually just from the ANZ region. Their market share was estimated to be nearly 40%. To put that in perspective, in the world of trade supplies, that's Amazon-level dominance. Competitors like TradeLink, owned by Fletcher Building, have spent years bleeding money trying to compete, eventually being put up for sale because they simply couldn't match Reece's efficiency. But there's a problem with being a monopoly in the country the size of Australia. Eventually, you run out of room. There's only so many bathrooms you can renovate in Sydney and Melbourne, and there are only so many new suburbs you can build in Brisbane. By 2018, the Wilson family faced a choice. They could sit back, collect their dividends, and accept they were a big fish in a medium-sized pond, or they could take a gamble that would either double the size of the company or threaten the legacy they had built over 50 years. True to their quiet, aggressive nature, they chose the gamble. In May 2018, Reece announced they were buying a company in the United States called Morsco for $1.9 billion. Investors were skeptical. Reece was taking on massive debt to buy a plumbing distributor in the American Sunbelt. The logic was sound on paper. The Sunbelt is the fastest growing region in America. It has cheap land, lower taxes, and a massive migration of people moving from cold northern states to the warm south. If you're going to sell pipes and air conditioners, you want to be where the houses are being built. And Morsco was a big player in that region. The integration proved far more difficult than anticipated because Reece was trying to migrate their entire Australian corporate culture onto a Texas-based distributor that operated on a completely different set of rules. The US plumbing market is very different from Australia. In Australia, the Reece brand is premium. It's clean showrooms, uniformed staff, and high-tech inventory systems. In the US, the industry is grittier. It's driven by price and relationships, often operating out of dusty warehouses with less emphasis on the retail experience. Reece sent their best people, including Sasha Nikolic, a former CFO and the man who successfully integrated the Actrol acquisition to run the US operations. Their goal was to Reeceify the business. They wanted to shift the focus from low-margin new construction contracts to the high-margin repair and remodel market. They wanted to introduce the Reece service standards. This friction led to what insiders might call a civil war. One of the crown jewels in the Morsco deal was a heavy civil unit called Fortiline, a massive distributor of underground waterworks infrastructure. In this sector, digital transactions are meaningless compared to the power of a handshake. The value lies almost entirely in the personal relationships between the sales reps and the contractors. Reece bought the company assuming these relationships would stay put, but the cultural friction triggered an exodus. Instead of taking their payouts and retiring, the former leadership immediately launched a revenge competitor dubbed Starline, a deliberate mockery of the Fortiline brand. They aggressively poached the best staff, who took their Rolodexes with them, stripping value out of the asset Reece had just paid billions to acquire. This is the nightmare scenario for any acquisition. You pay billions for a business, and the people who built it take your money, walk out the door, and start a new company to steal your clients. Reece had to fight tooth and nail to stabilize the ship. They had to rebrand. In a move that signaled they were past the point of no return, they decided to kill the Morsco name. By 2024, they had rebranded over 80% of their US network to Reece. They planted the flag to assert their status as hands-on operators, proving to the American market that they intended to run the business on their own terms rather than sitting on the sidelines. It was a slow, painful grind. They had to upgrade IT systems, they had to retrain staff who were used to doing things differently, and they had to convince American plumbers that this Australian company actually offered a better service. For a while, it seemed like it was working. Revenue in the US grew from $1.7 billion in USD in 2017 to over $3.5 billion in USD in 2024. The US business actually became larger than the Australian business in terms of raw revenue. However, raw sales growth can often hide underlying weaknesses. A lesson Reece learned the hard way when the global construction market hit a wall. By 2025, the perfect storm had arrived. High interest rates choked off new housing starts, inflation drove material costs through the roof, and consumers finally tightened their belts, exposing deep cracks in the company's bottom line. For Reece, this hit hard. The initial damage appeared in the 2024 financial year report, showing that while top-line revenue was technically holding, the post-COVID momentum was dead. The US business, which was supposed to be the engine of growth, was stalling. Margins were being squeezed, and the dream of double-digit margins in the US began to look like a fantasy. Reece management, led by CEO Peter Wilson, had to temper expectations, warning the market that the US environment remained challenging. The shareholders, usually a docile group who trusted the Wilson family blindly, started to get restless. In the corporate world, a first strike is a serious warning. Under Australian law, if more than 25% of shareholders vote against a company's remuneration report, it triggers a strike. If it happens to be 2 years in a row, the entire board can be spilled. At the 2023 annual general meeting, Reece faced a protest vote where nearly 20% of shareholders voted against the remuneration report. By 2024, the tension was palpable. Proxy advisors were telling investors to vote against the Wilsons, arguing that the pay was too high and the governance was too insular. The criticism was valid. Reece operates like a private company that happens to be listed. The board is packed with family members. Alan Wilson, the patriarch, was still drawing nearly $500,000 a year as a consultant well into his 80s. The share price immediately reacted to this anxiety, shedding its reputation as a reliable, unsexy compounder and entering a period of significant volatility. The market narrative fundamentally shifted, with investors openly worrying that the US expansion was a trap, the company had become too large to manage effectively, and the Wilson family might have finally lost its golden touch. By June 2025, profit was down significantly compared to the glory days. The company reported that costs in the US were rising faster than sales. They were spending millions on rebranding, millions on new distribution centers, and millions on digital upgrades, but the cash flow wasn't keeping up. The Wilsons, however, have always prioritized generational growth over short-term reporting. While investors fretted over the 2025 margins, management looked past the immediate volatility to focus entirely on building the infrastructure for 2030. To understand the future of Reece, you have to stop thinking about pipes and start thinking about data. The company's strategy has shifted from merely transporting hardware to capturing the data of the physical world itself. The company established an innovation arm called Next and a venture capital fund called Superseed. They started investing in startups that had nothing to do with PVC and everything to do with software. They bought stakes in companies like FieldPulse, a job management software for tradies. Why? Because if a plumber uses Reece's software to schedule his jobs, quote his clients, and invoice his work, he's never going to buy his supplies from anyone else. It's the Apple ecosystem strategy applied to toilets. Then there's their work on digital twins. In 2024, reports surfaced about Reece's experiments with digital twin technology. The concept is revolutionary for the trade. Imagine scanning a building during construction to create a perfect 3D digital replica. Years later, when a pipe bursts behind a wall, a maintenance plumber doesn't have to smash through the plaster blindly. They can pull up the digital twin, see exactly where the pipes are, and make a surgical incision. This transforms Reece from a shop that sells parts into a data provider that holds the blueprints to the building. It makes them indispensable. It's a level of value add that Amazon can't replicate. Amazon can send you a pipe, sure, but Amazon can't tell you where to put it or show you what's behind the drywall. This focus on the future began to bear fruit. In November 2025, Reece released a trading update that surprised a lot of people. At the time when the rest of the construction industry was buckling under recessionary fears, Reece defied the trend with an 8% jump in sales revenue. The US business was finally gaining real traction after years of grinding friction, powered by a largely completed rebranding effort and a fully operational distribution network. Even the chaotic civil war with competitors had stabilized, evolving from a desperate fight for survival into a methodical land grab for market share. This turnaround was the result of the Reece way, a stubborn refusal to cut corners on service even when it hurt profitability in the short term. While their competitors were cutting staff to save money, Reece kept investing in training. They kept their branches overstaffed so that when a plumber walked in, they got served immediately. So where does that leave us today? Well, Reece is a paradox. It's a company that sells the most boring products on earth, yet it's created more wealth for its shareholders over the last 30 years than almost any glamorous tech stock you can name. It's a public company that operates with the secrecy and long-term horizon of a private family office. It's an Australian icon that's now fundamentally an American business, with more revenue coming from the US than from home. The story of Reece is a reminder that in business, boring is often a synonym for profitable. While we were all watching the rise and fall of crypto kings and tech startups, the Wilson family was quietly buying up the supply chain of 2 continents. They've built a monopoly that's hidden in plain sight, and they've survived the skepticism of the market, the risks of international expansion, and the volatility of the construction cycle. But what do you think? Is Reece's dominance of the trade industry a triumph of Australian business, or is it a concern that one company holds so much power over the construction sector? And for the tradies watching, do you feel locked into the Reece ecosystem, or do you shop around? Let us know your thoughts in the comments below, and if you enjoyed this deep dive, don't forget to like, subscribe, and hit that notification bell so you don't miss our next video. Thank you guys so much for watching, and as always, stay curious.